Right now, Natasha, who, if you don't know, is the managing editor of HackerNoon, is on a Italian vacation, and it looks luscious as hell. And she's really giving me under the Tuscan sun vibes, and I am really appreciating it. And I'm hoping that that means that traveling is opening up and I get to see the world again. So very excited about that. Shout out to Natasha over in Italy. Have some vino for us. But anyways, this is the HackerNoon Podcast, and my name is Amy Tom. Today, I am joined by Tom Sosnoff, who is the CEO and co-founder of tastytrade, and also by Sean Salas, who is the CEO of Camino Financial. Welcome, guys. Thank you very much for coming on.
HackerNoon Podcast.
Thanks for having us.
Thank you.
So, guys, I would like to ask you a few questions about how you started your fintech companies and why it's so important to empower people with financial knowledge. But before we get into that, I gotta know right from the start, what was your very, very first job / how did you make your first dollar, Tom?
I was a caddy, 13 years old.
Ooh,
The first legit job, I caddied, 13 years old. I did my first loop. I got paid $7.25. That's with tip for 4.5 hours on a hot golf course.
What?
I did it for the next 7 years. So I was a caddy.
Wow. Is it because you love golf?
No, it's because when you're 13, I think in the middle of a recession, that was the only job I could get. So yeah, it was good.
Oh man, $7 for 4 hours?
Well, that's back when like minimum wage was $1.25. So who knows?
Whoa. Yeah. Okay. Dang. That was it a good job?
Yeah, I loved it. I learned how to play golf and gamble at the same time. It was good.
Okay, interesting. All right. And what about you, Sean?
I was a gardener. I used to be, or the official title, I guess, if it was official, because it really wasn't an official job, was an assistant tree trimmer. So we would, hop on a truck at 4:30 in the morning, drive to Beverly Hills, and I'd help a family friend trim trees. And we were basically in charge of, my twin brother and I, we were basically in charge of picking up the branches and hacking them away. And we were 15 years old. So wow. Yeah, my first job was very motivating, to say the least, because here I was, driving into Beverly Hills and seeing all these beautiful houses, and I was I was hanging out with all the rest of us, hanging out, eating. There's all these really good food trucks in the area around noon. They pop up and you go and you eat with everyone else that's doing landscaping or like work. It was kind of awesome.
Well, this was in LA?
Yeah, in LA.
Must have been so hot.
It was hot. And I guess if you look at it, it seemed like really hard work, but I was 15 years old, and the way we would get paid, it would vary by week. Sometimes we'd get paid in cash. Other weeks we'd get paid in the form of the guy that was hooking us up. He was a young guy too, and he loved going paintballing over the weekend. So we're like, hey, can you just, cover our weekend trip to go paintballing? So
okay, great. That's a pretty sweet job for a 15-year-old.
Yeah, yeah, it was really cool.
Okay, and then let's move on to what happened after that. Tom, did you go to university?
I did. State University of New York in Albany.
And what did you study?
I studied political science. There was no such thing as business, even though I don't think I would have studied business or finance at the time, but we didn't even have those choices. So I was a political science major. I was pretty sure I was going to end up as some kind of lobbyist / lawyer / I'm not really sure /
yeah.
But again,
and why did you not?
I got out of school in the end of 1979, which was a pretty bad recessionary period. Interest rates were like 20%. I mean, you don't realize it as a kid, but interest rates were 20%. There was no jobs. And I got an interview on Wall Street, and they offered me a job on the spot. I just took it. I've been in finance ever since.
Wow. Okay. What was that job?
Well, it was at a firm called Drexel Burnham, which is no longer in existence. They blew up under the whole Michael Milken thing, in the 80s. But back then they were like the hot boutique firm on Wall Street, in the early 80s. And the job was in their training program, and I never made it out because I got it when I was there. I met somebody, and he said, if you move to Chicago, we'll put up the money for you to trade. And I just left, packed up my car, and the next day and left.
Wow. Okay.
So,
and what interested you about finance at the time?
I didn't really think of it as finance at the time. Remember, there was not even a word. The word entrepreneurship didn't even exist back, 1981 or something. So It was really like, what interests me about Chicago at the time was, the trading floors were like kind of the last frontier of pure capitalism. I mean, it was the wild, wild west. And I thought it was super cool. And I was 23 years old, so I didn't give a crap. So, I thought it was the coolest place ever. So I just came here. I've been here for 40 years now.
Cool. All right, sweet. And Sean, did you go to university after the tree cutting?
Yeah, I did. I went to UC Berkeley. So it was interesting. My childhood took place both in LA, and then until I was 12 years old, I moved to Mexico. And then I'd literally make my money during the summers trimming trees. And eventually I was a summer counselor, which was one of the funnest jobs I've ever had, by the way. And then I'd go back to Mexico, and like literally every dollar that I made, I'd spread it over the course of that semester. And that was what that was my spending money. And then eventually I did move back to the US. I was lucky enough to get into UC Berkeley, studied international political economy, and that was good. That was cool. Yeah, my background was also in political economy and not in business per se, but I got a job on Wall Street through an internship program called Sponsors for Educational Opportunities, SEO in short. And they placed me on Wall Street relatively early in my between sophomore and junior year. I was able to get my first internship. So I actually was able to cut my teeth fairly early and ended up getting a full-time offer at UBS Investment Bank, but also joined in a very interesting year. It was 2008. So survived that recession and ended up transitioning into private equity, and thereafter going to HBS.
Okay. What is Wall Street really like, Tom?
Well, I was a 22-year-old kid. 23.
What was it really like then?
I mean,
actually, wow, I have a lot of questions about what Wall Street really was like back then.
So when I was 23 and I was 22, whatever it was, 22, 23, when I got my job at Drexel, I guess I was 23. They said, you can live here for 6 weeks in a training program in a hotel. I thought it was the coolest thing ever, but I didn't realize what, quote, Wall Street really was until I got to the trading floors in Chicago. And then if you can just think of, like, I don't know. I mean, it really was nuts. I mean, to me, Wall Street was what I had nothing to do with Wall Street, New York. I was Wall Street kind of, LaSalle Street in Chicago was more Wall Street to me. So it was Board of Trade. It was the CME. It was the SIBO. I was a SIBO trader. And it was, I was in a city with 5,000 or 10,000 young traders. And it was kind of like Wolf of Wall Street, it was almost out of the movie. Like, just if you can, a lot of kids with a ridiculous amount of money doing crazy, stupid things. And we made a lot, we spent a lot. And I guess we learned a lot. A few of us survived. That's about all I can say.
Ooh, okay. What was the culture like in the environment, I guess?
It was a culture that wouldn't survive today, but it was like think about imagine your worst locker room culture with all the males. Like, take your worst sports culture you could ever think of. It was double that. I mean,
it's exactly what I think it was.
It's exactly what you think. It was
okay, cool.
It was 3 or 4,000 alpha males all in a room, all big bodied.
Were there any women?
Small. Oh yeah, there was a few women, but they were tougher than the guys. The ones that survived were tougher than the guys.
Yeah, they would need to be.
They were stone cold killers.
Yeah, damn. Okay, wow, that sounds really exciting. Cool. All right, so I want to know then, Sean, how you started Camino or why.
Yeah, so we started, really it stems from our personal experience, seeing our mom immigrate from Mexico and opened over 30 restaurants here in Southern California to unfortunately see everything collapse. And so a big reason why Kenny and I ended up moving to Mexico when we were 12 years old is because my mom, her business folded. And that was a character building moment for all of us, to say the least. I would thereafter, quite frankly, enjoy the heck out of growing up in Mexico, but I always had that chip on my shoulder on what if, right? I'd ask myself questions of what if I were older and I would have been there with my mom so I could help her support her business. I mean, and that question of what if, I think has really, inspired me to be passionate about helping small businesses. Now, couple that with my experience working in finance, I think I saw a unique opportunity to leverage my finance background and use that to deploy capital into small businesses like the ones that my mom owned. And that's really the seed that planted Camino Financial. We were lucky enough to germinate that seed while we went to go get our MBAs. While I speak in we's because I have a twin brother. We co-founded it. We've been doing this all together. And we would thereafter germinate that seed while we're at HBS. And I think that the next step outside of the passion piece was the investment thesis, right? And really we saw, the US Latinx market is the largest Latinx market in the world. It generates about $2.6 trillion in GDP. That's larger than Brazil at 2.2 trillion, and twice the size of Mexico. And then, of course, there's this segment within this market that's very entrepreneurial and yet lacks a lot of access to capital. And what one thing we were doing while we were in PE is Kenny and I both were part of private equity funds that have an orientation towards investing in minority-owned businesses. But the reality is that we wouldn't invest in companies that made less than $7 million in EBITDA or profit per year. The average size of a Latinx-owned micro business generates $200,000 in revenue per year. So these are just really small businesses. And of course, how do you deploy that much capital at companies that are this small? Well, technology. And that would thereafter create the underlying investment thesis behind Camino Financial, which is really the intersection between fintech and financial inclusion, focused on empowering these micro businesses in the US Latinx market.
Why is financial inclusion for minority groups important?
Yeah, well, first of all, the US economy's growth has been fueled in big part by minority groups in the United States. If you look at population growth, if you look at consumer power, if you look at entrepreneurs, and that's a segment where I focus on, roughly today, for established businesses, about 15% of them are owned by Latinos in particular. I'm going to use them as an illustrative example of minorities. Obviously, there are many other demographics, but the Latinx market is one that I'm closest to, right? However, if you take a snapshot of entrepreneurs that are starting businesses, it's 1 in 4. And so Latinos, and you can actually, Black and brown entrepreneurs are the fastest growing business segment or most entrepreneur demographic in the United States.
Okay, wait, say that again. So 1 in 4
Latinos. 1 in 4 entrepreneurs today are Latino.
Okay, right.
That's and so you see a very very young demographic that's very entrepreneurial, that is going to be very soon, the next 10 years, if 1 in 4 entrepreneurs today are Latino, and only 15% of businesses, established businesses, are Latino, owned by Latino today, that proportion will converge over time, right? And we need to ensure that these entrepreneurs, not just Latinx, I think Latinos are illustrative of other minority demographics in the United States, right? We need to make sure that they're very well positioned to enterprise, right? That they have access to capital, that their survival rates are very high, that they can create in the process generational wealth. Because once again, leading back to the entrepreneur portion of this, it's that I see entrepreneurs, and the world sees entrepreneurs, right? America was built on this, as vessels for economic change, for economic viability within their communities. And so it's important that we empower that nucleus of our communities, and through entrepreneurs, right, they're going to create generational wealth that helps not only themselves, their business, but their community.
Mm-hmm. Right. Okay. Tom, I'm going to get to why you started Tasty Trade in a minute, but I would love to get your thoughts on this as well, because you have been in finance for a long time, and I imagine would have seen a lot of growth in terms of diversity in the finance industry. So what has that been like?
When you say diversity, do you mean diversity among we're 100% retail. So when you think about diversity in the financial space, it's more about, it's more like just demographics getting younger and demographics skewing more towards women than it is. We don't really break it down like the same way Sean did with, we don't look at it as based, there's no way for us. We don't actually even know who our customers, much about our customers other than age and things like that. So what we have seen in the last, especially the movement in the last, let's call it couple of years, is, we've gotten the engagement for retail investors has gotten a lot younger, or at least we've engaged a younger audience finally. And we've also, been able to, we're not 50, 55 and white anymore. Like that's pretty much was our primary demographic for a long time. And that demographic has changed now. We're about a third going through, multiple generations. And we are also almost a third women right now.
Right.
Which is much better.
What about the young generation, like Generation Z?
Well, Generation Z is really interesting. There was a transformational moment earlier this year with like kind of the meme stock and, the Robinhood explosion and the meme stock kind of explosion. And so it was definitely a transformational moment, and something that I've thought would happen for the last 20 years that I wanted to make happen. But, I guess, we were it wasn't our time, I guess. But it's something that we thought was going to happen. We weren't sure what the trigger would be. And the trigger was kind of like a bunch of events that happened simultaneously. But the good news is that it happened. And that's a really positive sign, because in the world of finance, if you don't do something when you're in your early 20s, the next thing you know, you wake up one day and you're 50 and you kind of miss the whole move. And when I say you miss the move, you wake up and you're figuring, now what am I going to do? Because, your appetite for risk and your ability to process risk is very different when you're 50 and you haven't done that since you were 20. I mean, I'm not, the big thing you need to know about us is, especially me, is I'm an active trader / active participant, advocate. I am anti-passive investing. So anything traditional about investing in a passive sense, I'm completely opposed to, for way more reasons than just building wealth or kind of total return. There's so many other aspects to active investing that I think are important, that's really what we focus on.
Okay. What is the difference between active and passive investing? Sorry.
Well, passive investing is you buy something and, you go to sleep for a little bit at a time, where you put it away and, you put it in your shoebox or your safe deposit box or your brokerage account. And, you look at it a couple times a year, and in 10 or 20 years, you hope everything you did was higher. or essentially along those lines. Active investing is you take a you take a role in every decision that's made. You aggressively manage what you're doing strategically. That means you can, you can improve basis, you can use different strategies, you can be on all sides of the markets, you can participate in all different products. And it's just a completely different approach to finance, to wealth creation. I mean, in the end, I don't know if you create more money being passive or you create more money being active. But what I do know is in the end, you create a lot more opportunity for yourself if you learn the skills of being active. In other words, it's right. Learning how to make decisions. It's learning how to improve brain processing speed. It's learning how to assess risk. It's learning how to be strategic in life. And it's things that you don't, like, we don't ever tell anybody, hey, I really hope my kid turns out to be passive. Like it's just not a way we think about it. But when it comes to investing, we say, wow, you should really be a passive investor. It drives me out of my mind, but that's kind of where I am.
Okay. And so tell me about how you started tastytrade and why.
Well, when I was on the trading floor for almost 20 years and 19 exactly. And I decided that at one point that the trading floors were going to change and go away a little bit and go electronic. So I decided to build this company called Thinkorswim. And it was a company we started in 1999, same people that built Tasty. And I started with my partner, Scott Sheridan. We became the primary, one of the best boutique online brokerages in America. We were bought out, we were publicly traded. We were bought out by TD Ameritrade in 2009 during the meltdown for $750 million. And we decided at the time that, hey, you know what, we're not ready to hang it up. So we honored our contract and then we started tastytrade to change financial media because I thought financial media was all bullshit. CNBC, Bloomberg, Reuters, Wall Street Journal. I couldn't stand traditional financial media. I thought it should be no news. I thought it should be all about no guests, all about quantitative math, statistics, quantitative analysis. And so we built a think tank called tastytrade. And then from tastytrade, we built tastyworks. And now we built it up into, another huge online broker and think tank research kind of, firm. We're the world's largest digital financial network. And we have about the 5th or 6th largest, online brokerage firm in America. And so we were actually just bought out. So.
And how long would you say that you've been on the think tank tastytrade journey
10 years.
For? 10 years. Okay.
We started in 2011 and it's 2021. Both firms were 10 years. Thinkorswim was 1999, 2009. Tasty was 2011 to 2021. And we're still, Thinkorswim still exists. Schwab owns it now. It's their primary platform. So it's the largest trading platform in the world right now is Thinkorswim, the one we built. But Schwab owns it. They bought TD Ameritrade. And then Tasty was just bought by IG, which is a UK-based firm, but together we've essentially merged, and together we have, it's one of the largest trading firms in the world right now. I think second or third. So that's the combination of both of our companies.
And you have come so far as a CEO. So what is something that you wish you knew before you started 10 years ago?
Well, I wouldn't say before Tasty, but what I wish I knew when I was trading on the floor would be, I kind of wasted a lot of my life like fooling around when I was younger. And I wish I understood entrepreneurship, because to the extent that I just didn't spend enough time in my 20s and 30s learning about technology. And I didn't really know that there was this other frontier out there. And I have no regrets, trust me, zero. But I just wish I'd started earlier in the kind of building businesses outside of, the kind of the trading floor, because I think that it's really fascinating what you can do. And I'm not stopping now. I mean, we're going to continue and build more stuff. And, it's just so cool. I don't care about the money. I honestly don't care about the money. It's really just about the fun of, conquering a new business and really doing things that nobody's done before.
As a serial entrepreneur, do you think that once you start one, you can start as many as you want?
I do believe that. I do believe that. And I think there is, and the reason for that is and I'm sure Sean can say the same thing. Once you've had certain successes, the successes are still difficult, but some of the hurdles early on, which like raising capital, which is very difficult when you first start out, when you've been successful and you've made people hundreds of millions of dollars, it's easier to raise capital. I mean, nothing else is necessarily easier. It's still hard to execute, but one of the big hurdles early on when you're starting business is raising capital. And when you've been successful, people, they're like, okay, well, listen, they've done it before. They've done it twice. They're going to do it a third time and a fourth. I mean, they keep betting on you, and rightfully so. So that's a little bit easier, that part of the hurdle.
Sean, is Camino your first company?
Yeah, it's my first company, and I can't emphasize enough the truth behind what Tom just said. I often ask myself, as an entrepreneur, but also as an investor, how much I've learned, or what would I do differently if I had to do it again? And I think there are a lot of things that you call them rookie mistakes, whatever you want to call them. And I also invest. I do angel investing, and I can tell you, and I'm very open to people that I mentor and I talk to, is if you're a first-time entrepreneur, you're gonna make mistakes, and in a way you have to bake that into your valuation or the execution risk associated with what you're trying to do. And obviously there's a lot of us that, I would include myself there, that do a better job learning from other people's mistakes, but sometimes you got to experience that pain yourself so that you'd ever do it. Number one. Number two, the fact that it's easier to raise equity dollars a second time around for all the good reasons does de-risk you by you're structurally de-risked, right? Because I don't think money solves all problems, but it does solve a lot of them. And one example in particular, it's not just about ease to being able to raise money, but also you're able to pull from your network of different people that are very talented, right, to help you go start this business. And over the course of the last 7 years that we've been doing Camino Financial, I've amassed such a great network of people within and beyond the company, and and equipped with that network, you're also just better positioned to succeed.
Yeah, that's really interesting. And okay, so I will admit that I would like to become an entrepreneur one day, and one of the hurdles that I feel like is there for me in my entrepreneurial journey is that like my lack of financial knowledge is like so stark, like it's bad. And so what advice would you give someone like me who wants to become an entrepreneur but has like very limited financial knowledge, Tom?
Well, you can almost guess what my advice is going to
Yeah.
be. I do a crazy amount of lecturing at different universities and podcasts now, mostly podcasts now, different places. But, and we have a very young firm, and I spend a lot of time talking to young entrepreneurs and people that want to get into the world of finance and things like that. I am a huge believer that the difference maker for, the real difference maker in the entrepreneurship world is speed of decision making. And regardless of what anybody says, there's everything's been commoditized now. Technology's been commoditized. Academia's been commoditized. Most things have been commoditized, meaning that you can basically learn anything. But one of the things that you just can't learn without doing it is the speed at which you make decisions. And to me, the most valuable people are the people that make the quickest decisions, and right or wrong. Now, obviously, we're not looking for somebody that's careless or something like that, but people that can make smart people, everybody's smart, but very smart people that can make quick decisions can be extremely successful in finance, because finance is about quick decision making. How do you get there? And it's really repetition. And I think the easiest way to do that is in the listed markets right now, which are so, I mean, I don't care. Make 100 crypto trades. If you like crypto, make 100 stock trades. If you like stock, make 1,000 option trades. If you like options, make 100 or 500 futures trades. The markets are one penny wide. You can make 100 or 1,000 trades now with less than $1,000. And in the process of doing that, you learn this incredible decision-making skills that almost happen, like it transforms you almost instantaneously. Very few people understand this. And from that, just build on it, see what you like. I mean, listen, it's pure, market structure leads to free market capitalism, leads to liquidity. And all of those things combined really help you, as a young entrepreneur. What you need to be able to do is make quick decisions and articulate things that people want to hear. Like when I hear somebody talk about, when I talk about what they want to do, their ability to articulate that's how I make my decision on whether or not I want to hire them, I want to invest in them, whatever it is. So once you can articulate something and make quick decisions, I think that's the most valuable thing you can do.
Quick decisions and make a lot of trades.
And the ability to explain what you're doing. So like you have to be able to explain your know-how.
Okay. And Sean, my question for you is, I guess, what kind of financial awareness or financial knowledge would you recommend me for something that is more accessible to minority groups, perhaps?
Yeah, well, I think when I think about my minority groups and nuance around financial education, I want to be clear, the math is still the same.
Yes.
Okay. And how you make money. The math is still the same for Latinos as it is for others. I think there is nuance in storytelling and reaching the market that I think uniquely positions Camino to deliver financial education to the Latinx market relative to others. Number one. Number two, I think we live in a market where there is real systemic racism, right? And where certain demographics have been more socially oppressed relative to others, which has implications on their education levels, which has implications on potential hardships that they're living, right, in their environment, in their ecosystem, and the type of people they've been exposed to. And so and then obviously that leads to it's expensive to be poor in the United States. So that also has implications on what you can borrow at and what products you would likely be evaluating relative to others. So I just want to make sure that when I think about the question you're asking me about how should I think about financial education as, from a minorities perspective, the short answer is all things equal, you shouldn't be thinking about it any differently than anyone else. Okay. Mm-hmm. But the reality is that all things are not equal in the United States. And so therefore that creates, an absolute need for organizations like Camino, but others to exist as well, so they can address the nuances of not only how do we educate certain segments in the market, but also how we design credit products and financial products in the market so they're best positioned to succeed. And so that's a very relatively broad answer to your question in terms of why we exist, but rest assured the math is the same. Yeah. And how you make money. And it's important that I think, stemming a little bit from the question you asked earlier to Tom, if you don't have a strong finance background, I still don't think that's necessarily an excuse not to resource yourself with information, because all that information is available, but also it may increase the burden for you to hire someone that complements that skill set, right? Mm-hmm. Because being able to make quick decisions from a financial lens, I do believe, and maybe I'm biased because of my finance background, is important for you to succeed. And so just make sure that it sounds like you're being very self-aware, and to the extent that's a gap you need to fill, do as much as you can to fill it yourself, but then find the complementary team members that can help you make quicker decisions with that frame of mind.
Mm-hmm. Yes. In my mind, I was kind of thinking I'm just going to hire somebody to do this, right? But I do want to have my own financial knowledge and financial empowerment as well. And yeah, I think like to go back to my question about financial knowledge for minority groups, I agree the math is definitely the same, but I also agree with the fact that like I want to consume financial knowledge that is like directed at me, or I don't know. Yeah, I as a consumer, I want to be able to know that my financial knowledge is like vetted by people who understand like what I want to invest in, maybe. I don't know. And then maybe that's just like me finding the right kind of person to gain financial knowledge from, or like the right educator. But yeah, something that that's been on my mind recently too. Cool. So, what do you think that the future of fintech is going to look like, Tom?
Well, I mean, fintech moves a lot slower than.
Oh, what? Really?
Yeah, I think that the future of now my future vision is a little different than most, but for me, the future of fintech is going to be about capital efficiency more so than it's ever been, meaning that the future of fintech is going to be more strategic. Of course, the technology is going to continue to get better and better, but I think the future of fintech is going to be more inclusive of new forms of financial products and more capital efficiency. So what you're going to see is, I believe, global digitization, lots of tokenization. In other words, you're going to see digital assets play a significant role in the way that we move money around and the way that we participate in different global markets. So we are going to become more globalized than we think we're going to be currently. And I think that capital efficiency and strategy is playing a role. Like, you're already seeing it. Stocks have priced themselves out of away from individual investors. Bonds are no longer even participatory for retail investors. And so the future of finance is in much more of capital efficient derivative type products, and spread way differently. Individuals, consumers are going to be more strategic, and the future will include a lot more, like I said, capital efficiency with what they do, and also a lot more tokenization and participation in kind of a digital world. I don't see any way of kind of breaking that apart at this point or changing the momentum. I think you're going to see a disruption of some of the large financial institutions. I think it's inevitable, and I'm looking forward to that.
Mm-hmm.
I mean,
the disruption of the financial institutions, I think, is a big piece.
Yeah, I think that the Robinhoods of the world and the Coinbases of the world, and the amount of market cap that they've already, the considerable amount of market cap that they've already created in such a short period of time, really opens the door for and then you have companies like Revolut and Chime and things like that. And so you're going to see challenger banks disrupt large banking institutions. You're going to see aggressive brokerage firms and digital asset companies disrupt traditional brokerage firms. And I think that's all underway. I don't think that's a massive change. I think it's a necessary and kind of demanded change. So I think that's all good.
Mm-hmm. Yeah. At HackerNoon, we have an influx of a lot of decentralization related articles, or DeFi, and I think a lot of people are moving towards like power to the people, and I want to own my money and that kind of thing. Yeah.
Well, I mean, there's some parts of it that are going to fly, and there's other parts that are not, but it is a fascinating, listen, you don't create a $2 trillion space out of nothing and think that there's nothing there. I mean, there's something there. And as the technology continues to improve, and as our participation with that technology gets bigger and better, it's going to change the way we commit to finance in this country and in this world.
Yeah. Sean, where are you at in terms of thinking about the future of fintech?
Yeah, well, we have a saying, which is fundamental fairness is what the output will be of fintech, which is effectively, creating an even playing field for everyone to transact. And maybe that's a very optimistic way of seeing the world. But I do think in many ways, FinTech does enable us to do that because it aligns incentives for people to make products accessible to all. How is it going to do that? Now, I'm going to use a micro example within the FinTech world, which is alternative lending, right? So you have your first alt lenders that were really more general, market focus on the general market. They weren't necessarily focused on any particular demographic, and it was really a land grab for scale using automation and thereafter AI ML technology to really automate and remove inefficiencies, right? And deploy capital when banks were actively pulling out for a variety of different reasons in 2008. And you've seen that market boom. And then you had the version 2.0s of the alt lenders. And they weren't as successful as the first because having a first to scale advantage was more important than just making marginal improvements in your business model. But what's gotten really exciting is the emerging class of alternative lenders have been, call them alt lenders 3.0, have been focused on, rather than making marginal improvements on the infrastructure where a lot of technology is becoming commoditized, we're going to create an expertise around niche markets that we see have a lot of potential to grow. And that's naturally deviated a lot of FinTech innovation around younger demographics, millennials, Gen Z, and now we're also starting to see that focus going into BIPOC communities, right? And that's really exciting because I think, stemming off of something that Tom said earlier, your ability to make decisions fast is a key competitive advantage. And you're only going to be able to make decisions as fast as your institutional expertise on a market opportunity that creates a lot of value. And I feel like we've found people focus more on specific markets as a core competitive advantage, right? While leveraging the innovations in technology around that. And then once you've captivated a market, then you can deepen your relationship with that market, right? So you may start with credit, but then, of course, every credit company wants to become a neobank, and that opens up another discussion. And so I'm optimistic. I'm optimistic that there's a lot of incentives to innovate in niche markets. And I think the US in particular has some of the most exciting niche market opportunities in the world. And, the one that we just happen to be focused on is the Latinx market.
Right. Cool. Exciting. All right. Tom, what is in your future for you and for tastytrade?
We're going global. So one of the reasons I wanted to do a deal in 2021 was because I have a rule, which is every 10 years, shake things up. Sean's still young, so he's got time to shake things up. But Sean, I think that was Theo Epstein, who was the general manager of the Cubs and the Red Sox. He said, every 10 years, I gotta do something different. I feel kind of the same way. Thinkorswim was 10 years, Tasty is 10 years. And now it's time to, you got to keep, just like, with your developers, you always have to keep them excited about new projects and things like that. I feel like you got to keep me excited about, the things that we're doing. So we decided that we were going to do a deal with somebody and that's licensed all around the world in like 17 different countries. So we can go global and take our content, take our message, take our technology. So we're going all through Asia. We're going through, just like I said, 17 different places. I mean, we'll be in India, Singapore, Hong Kong, Australia, Canada, Mexico. We'll be in South America. We're going to be all over the place and all throughout Europe in the next 2 to 3 years. And that's what my goal is. That's what I plan to do, is just have a little fun with, I'm at that age where everything I want to do, it has to be fun or I'm not doing it. So, so I'm going to have some fun. I'm going to have some fun. That's it.
Awesome. I hope that you get to do some traveling soon.
Well, that's sometimes this stupid biological pandemic gets in your way,
Yeah.
And, yeah, we do an incredible amount of live events, and we've been sidelined recently, for the last almost over a year and a half. So we're hoping that at some point in 2022 that, we can get back on the road.
Me too. And Sean, what's in your future and for Camino?
Yeah, so what's in our future? I think we're really excited. I'm at the 7-year mark, Tom, so definitely 3 years away from really shaking things up. But the good news is we've pretty much been a one-trick pony, so to speak, for the last 7 years. We've really been, building a very strong foundation around credit, and one credit product in particular. I'm glad to say that we recently launched a second, what we think is going to be a catalytic product designed around entrepreneurs versus micro businesses that's already building a ton of traction in a very short period of time. And so we're going to go from a monoline credit business to a multi-line credit business. But hopefully in the next 2 to 3 years, in that shake-up inflection point of ours, we really want to translate this multi-line credit business into a platform, basically leverage all the learnings that we've created over the course of those 7 to 10 years and package that into effectively a SaaS product that we can sell into banks and other corporations that have an aligned interest of making credit more financially inclusive for all. So that's going to be our way of shaking things up, and couldn't be more excited about the future.
Cool. Excited to see how that goes. So, Tom, where can we find you and what you're working on online?
Well, you can find me every day. I'm on tastytrade.com. We have 2 sites. One is tastytrade.com. That's our financial network. And it's all free. And I'm on from 7 o'clock in the morning till 10 o'clock in the morning Central Time, and from 2:30 to 3 every single day. And that's before other podcasts and stuff like that. So that's Tastytrade. And then all our technology and everything I've been talking about is on tastyworks.com. So we have Tastytrade and Tastyworks. Tastytrade is what I'm on, but Tastytrade is the parent for Tastyworks and a bunch of other companies.
Whoa, you're online so much.
Oh, yeah,
I'm
an
podcasting like 4 times a week. I need to get on this level. Wait, do you ever run out of things to say?
We run out of lots of things to say, but we produce 8 hours of live content a day, and we're about to go to 12 hours a day of live content.
Wow.
And none of it has guests and none of it has news. So we're just research-based live content. And then there's a lot of bullshit in between, but
That's awesome.
Wow. That's a lot of knowledge in that brain. Okay. And Sean, where can we find you and what you're working on online?
Yeah, so you can find me on most social media platforms at Sean D. Salas. I'm most active on LinkedIn and Twitter, but I also have my own podcast called Fundamental Fairness, which is all about financial inclusion from the lens of entrepreneurs, investors, and policymakers. So we really dig deep into how we can make this a more financially inclusive world. So check us out.
Great. Thank you very much. And I will remind everybody that these guys are nominated for Startup of the Year. So I will put the link in the show notes of the description of this episode so you can vote for Tastytrade and for Camino for Startup of the Year. And of course, you are listening to the HackerNoon Podcast, which was produced by HackerNoon, hosted by me, Amy Tom, and edited by our lovely audio wizard, Alex. You can find us online at HackerNoon on all the socials. And yeah, I'll see you next week. Stay weird, and I'll see you on the internet. Bye-bye.
HackerNoon Podcast.